try again. Give me a second. How we doing now? Can you hear me now? Is that working? Is everything good? Let me know if you can hear me okay. I think you can now. But yeah, Happy New Year. Happy New Year. It is 2025, January 2nd. Of course, no new year would be complete without a technical difficulty, of course. That's what happens. This is live, so things, don't always work out correctly. Hopefully you can hear me now, though. But anyway, yes, it's definitely better. I hope you had a wonderful New Year and that you didn't drink too much. I try not to on New Year's, but wonderful to be back. I can't believe it's 2025 already. I feel like we were just having this same conversation just a month ago in 2024 when January 2024 came around. But I can tell you, I think 2025 is going to be a really, really, really interesting year for investors in many ways. I mean, whether we have a down year or an up year, it's always interesting because it presents opportunities, right? Anyway, it is a beautiful day here. I'm just going to open the curtain. It's about 21 degrees here in Orlando, sunny. I know the weather in England has been a bit cold and chilly, but we're getting some cold weather here too, so don't feel too bad for us over here in Orlando. But I do miss the old British winter sometimes. It's nice to have some cold weather. Anyway, Harley is here, and I'm going to take this off because right now we do not have a stream sponsor anymore, sadly. Our agreement with Cuffling came to the end at 2024, and we're going to see if we are going to continue that into 2025. We'll find a new sponsor for the stream. It is important to get that support because obviously it does cost money to run this channel and to do everything that comes along with that. So I'm trying to find a new sponsor. But in the meantime, we're sponsored by Harley, the official wiener dog of the Financial Things stream. So till we get a new sponsor. Anyway, we have a lot to talk about today and this evening. Some peer-to-peer things. We're going to talk a little bit about collateral and the FCA, what they've decided. We saw some news on that come out. We're going to do a House Martin update. We're going to have a look at LoanPad, look at PropLens year-end email that they sent out. I got a really awesome email from the mailbag just a day ago, which is perfect timing for what I want to talk about today when it comes to investing. And I think we'll take a little look at Bitcoin. I want to show you the Trading 212 portfolio and what is going on with that. So yes, a lot to get through. Welcome to everybody in the stream. Hello, Colin Perry. Peter Vince is here in Leatherhead. Alan Stratford, welcome. Happy New Year. David Dawson, Happy New Year to you. Stephen Hale in very chilly Nottingham. Crazy Cash Pap is here. The usual suspects, so please hit that thumbs up if you can for the stream. It really helps out. But we're going to get right into it without further ado. Let's take a quick look at the LoanPad dashboard because we haven't not done that in a few weeks. So hope you can see that okay. You can see here we're still kind of, things haven't really changed much since December of 2024. Total LoanPad loans now 97.5 million. I really don't think that's changed at all. So it's probably a bit of a downtime at the end of December for the new year. But 5,752 lenders, average loan to value exactly at 43%, with no loans that are implementing the ICF, which is the interest coverage fund. Still stands at £42,322. And yeah, look at this. Total security value, £225 million. I expect LoanPad is going to have a good year. I'm just going to predict that now because sometimes my predictions do come true. But estimated time to sell, less than a day. Estimated time to invest, less than a day. So really good liquidity. Things have not really changed at all with LoanPad since 2019 when it comes to their liquidity when they launched. Still very good. A little bit of LoanPad news, kind of more of an update. This was an email they sent out the end of December. It says over the course of 2024, and this is a loan update, kind of a loan portfolio update. Hang on one second. I'm just going to move this desk up a tad. There we go. Oh, by the way, hey, if you've never gotten a standing desk and you've always had a sit-down desk in your office, I highly recommend standing desk. This standing desk that I purchased a few weeks ago has really been life-changing. Just makes me feel better for productivity, and I can move the desk up and down. So quick life tip there. Anyway, back to LoanPad. Over the course of 2024, the size of the LoanPad loan portfolio has grown over 20%, whilst maintaining their track record of 0 losses and currently 0 anticipated losses on the existing portfolio. The loan portfolio has grown considerably in the number of current loans from 180 at the end of 2023 to 250 today. So good growth right there, which further increases your diversification. The average loan currently represents 0.4% of funds invested. These are statistics by way of comparison to the end of 2023. So you can see here the loan book went from 85 million to 103.5 million. That's December of 2023 to December of 2024. Live loans went from 177 to 245. Average loan went from 471,000 in 2023 to 410,000 in 2024. Average loan to value ticked up just by 1%. You can see the average lender, this is cut off a little bit, but average lender in December 2023 was lending about £16,500 to 2024 in December £18,000. So more lenders putting in more money. And lending partners has increased from 16 to 19. Look at this. Loans repaid went from 134 million to 205 million. So a large number of loans repaid. Total repaid 376 in 2023 and 565 in 2024. Total losses of 0. It says here that LoanPad's pipeline of loans remains strong, as does the appetite from investors for our classic and premium accounts, and that LoanPad remains committed to the same ethos and standards that they've always maintained with respect to the lending structure and stringent lending processes. So really good progress forward, and I think economically 2025 is definitely going to be a bit of a struggle. I mean, 2024 was a difficult landscape for peer-to-peer lending in general. Certain things have really changed the landscape of the economy in the UK. I don't know if it's necessarily in recession, but it was a difficult road to navigate, and some peer-to-peer lending companies have done pretty well considering it was a very difficult road, LoanPad being one of them. We're going to do a quick House Martin update. This was sent out for December the 24th. Of course, this is the old Assets Exchange that we no longer call Assets Exchange. We now have House Martin. It says in December they hit a milestone. Over £400 million in interest has been paid to our investors, with monthly interest payments now exceeding £125,000. Looking ahead to 2025, they have big plans with the property pipeline. They've got 2 further properties that are in the pipeline for Golden Lane. One's a 3-bed property on St. Michael's Close. They negotiated that property down from $400K down to $380K. And they have another one on Ashbourne Lane in Derbyshire that is being sold with tenants in situ. And they're buying that, I think, for $325. So, yeah, House Martin continues to move forward with their peer-to-peer lending business, the business that was formerly known as Assets Exchange. Propland sent out an interesting end-of-year report. They took a lot about the economy. I'm not going to really go through that, but there's a few things on their news if you are a Propland investor. I think Propland has been relatively a strong company too for 2024 within peer-to-peer lending. It said they had a slightly lower volume of loans. 2024 has been a strong year for loan redemptions. While not all of them have been easy, Proplan has worked hard to ensure redemption has come timely as possible. It says they have not written many bridge loans in the past 18 months because generally interest rates have made that pretty difficult for them to stay competitive versus their competitors. I don't know that that's necessarily a bad thing. I think that if Proplan continues to do what they've always done, then bridge loans are a nice little bonus, but also obviously they are being very cautious as to what kind of bridge loans they want to put on the platform, which I think makes sense. They have taken a large technology project on during 2024. They said there will be few visible changes for lenders. It's more about the robustness, performance, and efficiency of the platform. So kind of not dissimilar to what LoanPad is doing in the back end of their platform that you won't necessarily see on the user interface. But that is going on. It says that Proplan remains a small and efficient team of 9 people, with 3 of them have been there since day one. I've been to why do I keep saying LoanPad? Proplan's offices before and met with them. I like what they're doing. I think they're an experienced team, so hopefully 2025 is going to be good for them and continue to be good. In Europe, looks like peer-to-peer lending could see a growth by 4.4% in 2025. This was a analysis put out by RoboCash, the Croatian-based peer-to-peer lending platform. They have said that the average annual rate of return will reach a plateau of 11.6% next year for investors, thanks to recommitments by long-term investors and rising demand for alternative investors. According to the lender, approximately 106,000 new investors will be interested in peer-to-peer lending in Europe in 2025, representing a drop of 16.5% from 2024. I've been getting asked this a lot about peer-to-peer in 2024 because it seemed like it was very quiet. I think the problem was that peer-to-peer was not seen as a very sexy investment. While everybody was making money in the stock market hand over fist, peer-to-peer lenders that are offering 5%, 6%, people start to say, well, is it really worth it? I can get more money in the stock market. That's all well and good while the stock market's doing well. But when we have those reversals, which happens, we saw a reversal just a few days ago before the end of 2024, people start to look at things like savings accounts and more fixed income investments as being an attractive place to park their money. But unfortunately, when the stock market is doing well, sectors like peer-to-peer lending and things like bonds don't look very attractive, and people are always going for the shiny, bright object when it comes to investing. And this is just one of the things that comes along with that. I think peer-to-peer is going to have a steady year in 2025. I don't think, again, it's not going to be sexy. You're not going to get 15, 20% returns. But I think slow and steady wins the race when it comes to investing at this part of your portfolio. Quick word on IFISAs, because we are coming up to that season. Of course, April being the deadline to get your £20,000 in. It's the only gift that the UK government will give you this year, so take advantage of it. According to the HMRC ISA Manager Register, 65 companies are currently authorized to offer IFISAs, yet only 40 are currently marketing the products on their website. That's 40 crowdfunding or peer-to-peer lending companies. And just a quick word on the minimums, because again, this is something I do get asked quite often when it comes to ISA season. LoanPad has a minimum investment threshold of just £10. Abundance offers IFISA access with just £5. You got higher company rates like Cufflink, which raises its minimum to £1,000. Rebuilding Society, £5,000 minimum. And then the higher end folk-to-folk minimum, £20,000. Easy Money, which is the largest ISA manager in the country, and the IFISA department, comes with a minimum investment of £100. But if you want to get that higher interest rate that they offer, you're going to have to put in $20,000 or more. So make sure you take advantage of that ISA, even if it's not in peer-to-peer lending, stocks and shares, ISA, etc., etc. Let's talk about collateral. There was a Financial Times article that came out recently saying that big news. The FCA has issued a groveling apology for failings that led down hundreds of people losing millions of pounds they invested in the fraudulent peer-to-peer lender Collateral. The Financial Conduct Authority told more than 300 people who had complained about its bungled oversight of Collateral it has accepted opportunities were missed. Opportunities? Interesting use of word. And that it was slow to shut the company down after discovering its wrongdoing. They said, "We are sorry for the FCA failings in relation to its dealings with Collateral and the distress and inconveniences it undoubtedly caused you, and that the FCA has a great deal of sympathy for the investors' situations." They're very, very, very sorry. What are they going to do? Well, they have offered to pay, this Financial Times article says, £700 in compensation to Collateral investors who complained about regulatory failures. I think that that number is actually £650, but you can get this money if you are a collateral investor, and it says to those who complained, they are going to give you an opportunity to complain now. So make sure, if you're a collateral investor, and I put the description link in the description of this video, there is a form online at the FCA's website. You can do this until the 31st of March 2025, so make sure you go ahead and do that. Fill out this form. Okay, it says here they're going to make payments of £500 to those who invested in Collateral. I've been hearing different amounts of money. The Financial Times says 700. I think there's the actual number is 650, and there's an extra an extra 150 on top of the 500. But go ahead and fill out that form. Make sure you do it before March 31st and get yourself some money back. That's going to make a bit of a difference, certainly, to what I put in at the time. I think I put in 2,800 or something like that. I can't even remember. It's very early in my peer-to-peer lending days, so that's going to offset that loss just a little bit. Still stings, but at least the FCA is taking responsibility, and they're going to do the right thing by the people who they are supposed to be protecting, and sometimes doing a horrible job of protecting them. So yeah. Again, link is in the description of this video, so you can go ahead and register a complaint with the FCA if you were a collateral investor, and you can show that you have proof of that. Okay, what should we talk about? Let's go into the mailbag. Okay, I got this really great email on January 1st, New Year's Day, 2025, from a gentleman named Pablo in Sussex. It says, "First of all, I hope you have a wonderful Christmas in 2025 is an even better year." Same to you, Pablo. Thank you. Now to my question. I'm 30 years old. I cannot seem to stay disciplined with my investing. I have a trading 212 account. Find myself moving in and out of stocks frequently. I think this is more of a behavioral issue, one that I really want to address for 2025. I've watched a lot of your Trading 212 videos, and I was wondering if you could share a little on how you've performed with that portfolio compared to the S&P 500 in 2024. I suppose the real question here is, should I be trading stocks and trying to be the markets? Not really sure what that means. I think probably he meant beat the markets. I think I know the answer to this question. I made around 16% profit in 2024 in my account. Pretty good, right? Or is it? Thanks for any insight you can share. Cheers, Pablo in Sussex. This is something that I talk about, seems quite regularly, and I always think, am I talking about this too much? Obviously not, because I keep getting these emails, especially from younger people. I think being young and investing you're in such a big advantage. And these types of emails are really important to address for people to stop making the mistakes. So there's a couple of things that I wanted to just go through here. Why it's important just to kind of stay the course when it comes to investing. So these are really important points. I hope Pablo gets to watch this, but number one, invest regularly, set up automatic contributions that ignore market gyrations and emotions, take the timing component out, helps buy low without even trying. I like that. Follow the plan, develop a long-term investment policy statement, complete with target asset allocations. Now, if you invest in just one index tracker fund like the Vanguard US Index Tracker, you don't have to worry about this. But this says rebalance when allocations drift. So this is people maybe who are doing some fixed income investing. Expect volatility. Understand sharp market swings in both directions are normal and will occur regularly. Perfect. So true. Have this expectation prevents overreacting emotionally. Focus on the destination. Keep your eyes on the prize. Don't sweat intermittent peaks and valleys. Ensuring your portfolio aligns with future needs matters far more than monthly returns. Have play money. This is a good one. If you have a trading itch that you feel like you have to scratch, allocate a small portion of your portfolio to higher risk bets. Don't just gamble your essential long-term money. Control biases. Learn to identify innate biases like overconfidence, loss aversion, and recency. Then develop habits to counteract these tendencies that hamper returns. And then finally, maintain perspective. Markets have rewarded long-term investors over time, but expect some years to test your faith in the equity markets. Don't abandon the plan due to recency bias after downturns. Okay, so a couple of things here. Number one, have play money. This is really important. I think there's a lot of people out there that feel like they need a bit of a high from stocks, and I think, you know, having a small percentage of your portfolio where you can invest in individual stocks is okay. I think it's more of a hassle and it's really worth it. I'm going to show you why in a second, but that's important. And then also expect volatility. I found that during really nasty market downswings, it kind of give you a bit of a bad feeling in your stomach. So what I do is I don't look at the stock market at all when things are not going well. Just ignore it and leave things be. Come back to it when things have turned around, because I don't want to make a bad decision. I'd really try not to do that. But going back to Pablo's email, do I think that trading is a good idea? I certainly don't. Even though you made 16% profit in 2024, what you're going to find out is it actually wasn't that great. Let me show you why. You might not be able to see this as small, so I'm going to enlarge it. But right here, the total return of the S&P 500 according to Slick Charts was 25.02%. Price return 23.31%. So this is the dividend that you would add on to the 23.31%, the 1.71% dividend to bring it to 25.02%. Now, Pablo says that he made 16%. You can see right there that he has lost about 9% in gains by trying to be a trader. So pretty interesting, right? There is a post on Twitter/X I really liked. It says monthly investment needed to become a millionaire at retirement. 20 years old, all you got to do is put $95 in, or pounds, whatever you want to call it, a month to get to that millionaire at retirement. 25 years old, 184. 30 years old, 340. 40 years old, you need to put more away because you started later. This is kind of where I started. I was 41. 1,052 per month you need to put in. And if you're 50, look at that. You got to start putting in 3,155 pounds or dollars a month. This assumes a 10% annual return that decreases by 0.1% each year, resulting return at 5.5% at 65. Why the decrease? Probably rebalancing, maybe going out of stocks into less risky things. But you can see how starting early, I mean, if you start at Pablo's age, $340. But I started to kind of go back and look at the trading 212 portfolio, because this is a trading portfolio that I had envisioned was going to be able to beat the markets, and it really hasn't. Right now we're sitting at 23,658 pounds, which is good. It's been good. There's been some good years and some not so great years. But I wanted to go back and kind of see where we came from with this portfolio. So this was the first video that, hopefully you can see that I posted in, what would this have been, 4 years ago. It was at 5,500 pounds that it started with. And that was, I believe, September, October of 2020. Yeah, 2020. So you can see here the account value that actually, I believe, let's see how, I think it was 5,500. I think I put a little extra in, but it originally started off at 5,500. You can see here it says 5148. So I skip forward to, what is this, 2021. This was the end of 2021. This number right now, that year, was 14,934 pounds, and that was with no additional putting more money in. So had a really great year that year, 2020 to 21. So tripled the portfolio. Very unusual. That's usually just not going to happen. And then to 2022, and this is the last stream of 2022. So these were December to December, year on years. Here we were at 17,001. So we actually made about $3,000 for that year. And then 2023, this is the final live stream of 2023, 19,439 pounds and 59p. And then 2024, now we sit at the end of December. Well, today, we'll just look at today's number, 23,624 pounds. So we put those numbers in from, say, where we ended in 2023 in December to today. Let's just call it 23650. We actually made 21.6%. So what we ended up doing in the trading 212 portfolio, and this is important to see for Pablo, is for all that hassle that, and kind of stress that went into this trading 2-1 portfolio, we actually were almost 3.5% worse than the tracker would have done of just shoving it in that S&P 500 or the broad market tracker, whatever, the index tracker. I lost to the market. I could not beat the market, which is not surprising at all. I don't think most people can beat the market. I think this is why I tell people just put it in the index tracker and forget about it, because all of that trading that I did also incurred taxes too, because on the gains, I've incurred some taxes from buying and selling. Some of those will be short-term capital gains. So is trading a good idea, Pablo? I'm going to tell you it's not. It really isn't. I would consider myself a little more experienced than most people, certainly by no means advanced. I do study the markets a lot, and you can see here in my portfolio here, the ups and the downs. We got 46% increase on NVIDIA. We got 12% down now on MicroStrategy, which is $297. You can see that's really been very volatile, which I expect, but still in the red. The S&P 500 has obviously dropped a little bit over the last couple of weeks, so we're still in the green of 7%, 7.4%, so slow and steady. And then Amazon has been a good one, 30% in the green, and Coinbase now at 60.72. But that stock has just really come down a lot. You can see $343 down to $256, so almost $100 drop on that stock. And then Valco Energy is just really now flat broke even. So yeah, this portfolio it's been really good from 2020 to 2021. I would say a lot of that was blind luck because the markets were just doing really well. during that time. But, you know, if you can imagine a down market, these stocks are really going to get hammered. I would not feel very comfortable trying to trade or even just having such a lowly dense portfolio. We've only got 1, 2, 3, 4, 5, 6 stocks in this portfolio, so we're not diversified at all except for the Vanguard S&P 500 fund that you can buy inside Trading 212. So yeah, Pablo, don't trade. It's not worth it. You've already lost 9% from 2024 if you just put in the S&P 500. You imagine doing that for 10 years. That's 90%. That really compounds to be quite a lot of money that you're going to be losing out, and especially if you make the wrong decisions and, you know, this turns out into a bad minus number. Let's take, for example, what used to be a darling stock, right? There was a darling stock of, let's say one of the darling stocks I used to think was a great stock, Intel. It's a great example of how you can really, really make a bad mistake. Here, look at this. It was $50 in, what was that, January of 2024? And then look at it, boom. Now we're at 20. So you can quite easily make a big mistake like that. You don't want to do it. It's just not worth it. Speaking of the Trading 212 portfolio, we made a profit of 23,650, so about £4,000 from 2024. And I just wanted to show you, I say every year that I make a donation. I don't want to do this to brag, but it's more to keep myself accountable. The profits, I try to do around 10%. I might be a little less, so if that's not quite right, I will make it up to these two donations. But here's the donation we made to Worldwide Healing Hands, December the 11th, 206 US dollars. So that's the Dr. Paula Danda Foundation in California that I donate to. And then Forest Home here in Poole in Dorset made a donation of £250. Yeah, when was that? I think it was December. So it's good that I think I would make these donations regardless, even though the portfolio was not doing well. But I just wanted to show that to you. If you ever are looking for wonderful causes to give some money to, Forest Home in Poole in Dorset, where my dad was housed very generously in hospice there, and they took wonderful care of him at the end of his life. Certainly a worthy donation place. And also Worldwide Healing Hands, Dr. Paula travels to different countries and gives free medical care to women. Really great cause. You can go to worldwidehealinghands.org or Forest Home, Google them. They take donations. Really cool. This is a great tweet that I found. Things that didn't exist on Christmas 25 years ago. iPhone, Tesla, YouTube, Twitter, SpaceX, Gmail, Instagram, Bitcoin, Facebook, Skype, Amazon Prime, Google Maps, Netflix, Android, App Store, WhatsApp, TikTok. Maybe that would have been better if TikTok had stayed not around. Snapchat, Xbox, Fitbit, LinkedIn, iPad, Uber, Airbnb, Reddit, Spotify, and Zoom. Wow, that makes me feel old. Can you imagine that iPhone was not around 25 years ago, or YouTube, or Gmail? Cool tweet. This was a very, very cool article that I found off Twitter. It was a mayor in a very rural community in Texas whose community, when the mining had disappeared, which happened in 2008. There's a small mining community in that town, and when the mining shut down there, the community really suffered. So a couple of businesses came in there and started Bitcoin mining, and the mayor said that he didn't really know what Bitcoin was or what Bitcoin mining was. Was Bitcoin even real? The mayor had his doubts. But he goes on to talk about how invested the Bitcoin miners have become in this community of Rockdale, Texas, and now these companies employ hundreds of people. They've created mid-skilled jobs, allowing locals to find well-paid employment without leaving Rockdale. So that's really cool. That kind of goes to show you that for all the naysayers of the Bitcoin community who say, oh, Bitcoin is bad, it's terrible for the energy, it's terrible for the economy. It shows one real life example of how actually Bitcoin is doing really good things for communities. And these Bitcoin mining companies, yes, of course they're in there to profit, but they've invested over $1 billion into this little town in Rockdale. They are the largest taxpayers in the county and for the local school district. And the companies donate to local causes, including scholarships, police and fire departments, youth sports, and the Chamber of Commerce. And they sponsor community events like the annual Christmas tree lighting. So I think that is a really cool article and just goes to show that good things are being created from the Bitcoin community. Here's an interesting, there's Harley, quick screenshot. Bitcoin returns 2010 to 2024. You've seen the year 2010 when it started. Beginning of the year, it was 0.003 cents. Went up to 0.3 cents that year, so 30 cents. 9,900% increase. And this chart just shows throughout the years how Bitcoin has really performed. I still hear these Ponzi scheme things, but yet billions and billions and billions and billions of dollars have been going into this vehicle. And it's had 3 losing years of negative percentages, okay, in 14 years, 3 years. This is an outperforming asset, if ever I've seen one, and one that has been around now for 14 years. Yes, that's a relatively short period of time if you compare it to the S&P 500, but for everybody that is discounting this as a investment vehicle, a 14-year track record with 3 down years and 11 green years, and some of these green years are significant. 2024, 121%. 2023, 156%. Some of the biggest years, obviously, some of the early years, 2017. The price of Bitcoin went from $968 to $13,860, 131%. It just goes to show that it's something that it may not be for everybody still, but it's certainly something that shouldn't be discounted as a diversification in a portfolio that should be balanced of investments, including peer-to-peer lending, S&P 500 stocks, real estate, if you can afford it. But who can afford that nowadays as an investment? Most people cannot. But you can buy a fraction of a Bitcoin. So interesting. And let's see what else we got. Oh, fun fact. 14 years ago, this was on Christmas Day, someone bought 50,000 Bitcoins for 25 cents each. Talk about a Merry Christmas. That's a pretty cool fun fact. And let's see if I got anything else for you. We might actually end the stream in less than an hour today. Pretty cool. It's a good start for 2025. Let's see if I have anything else interesting here. I pulled off the magic interwebs. Oh, I pulled up a video that I had made just quite randomly, and speaking of Bitcoin, December 10th, 2020. Let's see if you can hear this. Let's see if I can back up just a little bit.
The way
I don't know if you can hear this or not. Let me see if I have the sound turned on.
Step, elevator down. Step, elevator down. Step. Anyway, I'm making a prediction. $40,000 Bitcoin by summer of 2021.
Headphones.
I said it.
Can listen.
Wouldn't be surprised if it's $100,000 by 2024. $40,000 Bitcoin by summer of 2021. I said it. Wouldn't be surprised if it's $100,000 by 2024.
So, my predictions are usually pretty terrible. But I thought that was really interesting that I just discovered that video from December the 10th of 2020 where I had said when the Bitcoin price was 18,247, that was just a little bit over 4 years ago, I predicted in 2024 that the price would be not surprising if the price hit 100K US. And was that blind luck? I don't know. Probably. But that's just kind of what I thought back then. I'd been studying it pretty hard in 2020, all the way from 2017. I really believed, looking at the history and the charts of what I thought was going to happen with the money coming into the space, that price would get elevated to 100,000 US dollars in 2024. So sometimes as internet peoples, we do get it right. Oftentimes we get it wrong. I think many times we get it wrong. But that one was a pretty interesting prediction that did actually come true for 2024. 2025, what are the plans for peer-to-peer lending? I think more of the same. I mean, I don't really expect to see new companies coming into the space. Because again, I don't think it's a sexy space. I don't think that investors are looking at this peer-to-peer lending and going, wow, I can really make a lot of money off this. I think they're looking for very, fast investments nowadays. People are not patient, especially younger people. You got people trading stocks now in their 20s and trading cryptocurrency and looking for that fast, quick gain. They're going to get really hurt when the markets do make a reversal. We haven't had a really bad reversal since 2022, and it was very short. 2020 we had a bad reversal, and those people trading stocks then kind of disappeared. But I think 2025 will be a very more of the same year like it was for 2024. I don't really plan on changing anything. I just kind of have things left as they are. I will probably increase some of my positions in P2P for 2025. Just not quite sure what that's going to look like at the moment. But when I do figure it out, I'm going to write it down on a piece of paper and really stick to that theory and that thesis. So going back to what we spoke about, not going too far off course and having, your points that you stick to throughout the year with your investing. Don't try to do anything too crazy. That's my plan, 2024. But 2025, what are you going to do for this year? What's your peer-to-peer lending plan for 2025? Are you going to keep things the same? Do you plan on increasing your allocations to peer-to-peer lending companies, specifically which ones? I don't know which ones, but I kind of have an idea of where I might increase. I'm not sure there's going to be anything new in there. I don't know yet, but things have really been slow and steady for 2024. I've been relatively happy. Be nice to get assets capital out of there, closed down, paid back. I don't think that's going to happen in 2025, but that would make me happy. It's nice to get a little bit of money back from collateral, hopefully from the FCA. But much more of the same, I think, for 2024 as 2025. So let's see if you have any interesting comments. Happy New Year. Yeah, Happy New Year to everybody out there in the stream. I really hope 2025 is a wonderful year for you. I know it will be. Don't forget, this month we have Peter Reed from House Martin, who's going to be here. I think it's the end of the month, if my memory serves me correct. And then 2025 in February, we will have Mike Bristow from Crowd Property. And some people have been asking me about what I think about Crowd Property. I think they've had some challenges, but I think they're going to really get on top of what's going on. I think there could be some losses on some loans. I wouldn't be surprised, but I don't think they're going to be too severe because they can collect interest penalties and extra payments on those, which might help offset some of the losses if they do happen. But we'll see what Mike has to say next month about it. It'd be nice to get an update. The motto for the year, I like that. Pizza Vince. Let's thrive in 2025. I like that. Hi, Patty / Jeff in France. Good evening. Good evening, Lawrence. Happy New Year. What's your view on how Trump will affect the U.S. stock market, if at all? By the way, this isn't a trick question. How do I think he's going to affect global markets? And how do you think he will affect global markets? I think generally people generally think in the U.S. that a Trump administration is going to be good for the economy. He's a businessman. They think that he's going to try to really attack this debt situation. The only way I think he can do that is through some kind of a Bitcoin strategic reserve that gets sat on for 20 years. I think that could completely eliminate U.S. debt. Whether that goes through Congress and gets through the people who have to vote on it, I don't know. That's a big if. I think maybe there's a 10 to 20% chance that happens in 2025. But generally, the sentiment in the USA is Trump is going to be very good for the economy. And if that is the case and stocks do well in the US, I think it trickles through to the rest of the world. And the year 2025 should be good for global markets. We'll see. That would be my take. I think if Trump can keep his mouth shut too and stop saying stupid things, that should help. Great podcast content over the year, Lawrence. Thank you, Richard. Appreciate that. Crowd Property has went from the darling of peer-to-peer world to one to seriously reconsider investing in. Oh, quite timely comment. There's email updates regarding projects and haircuts up to 70% has been talked about. While I accept risk, this shows the need for auto invest only to minimize overall risk. By the way, that's what I do. In crowd properties, I only do auto invest nowadays. A classic need of needing to spread between many loans and many peer-to-peer providers. Absolutely. Totally agree. When you try to concentrate too much on just individual loans, this is one of the problems of manual investing. If you get it wrong enough times, your portfolio is really going to take a hit. So I like auto invest. Pizza Vince says 2025 plans. I'm getting older. I want to simplify things both for myself and my executor should the worst happen. Peter, I hope you're around for a very, very long time to come. But simplification is a beautiful thing. I've been thinking about that too myself this Christmas. So good point. Crowd Property recently had 2 late loans resolved with big capital losses. There you go. So, case in point. I wonder how that will affect sort of the overall portfolio. I think it's very unusual for a peer-to-peer lending to go through lending with no capital losses. Cufflink claims that they have 0, LoanPad 0. It's just so unusual for a company to be operating for that many years and not to experience a loss lending money to people in the real estate and property market. I mean, I've been involved in property since 2003, and I've experienced several losses myself. Either they're very good at their jobs and able to get 0 losses, or they have a very interesting situation set up like LoanPad does where they don't take the hits. The lender takes the other lender takes the first hit. So, yeah, I'm not, it's obviously very disappointing to see people take capital losses. But again, to Richard's point about how important I think diversification is and also auto lending, it's really not surprising that there are going to be some loans that do experience capital losses. The question is how many loans. That's going to be the big thing. Now, I know Fourth Way, for those of you that like Fourth Way, still stands behind what they say about crowd property being a solid place. I think it's, at the end of the day, we don't know what goes on behind closed doors like Mike Bristow's going to know. We can only see what they tell us. So there is always that part of the risk of investing through peer-to-peer lending companies or any companies. You don't know what's going on behind closed doors. So we'll definitely get more of an idea in February when we speak to Mike live here on what's going on and how he expects the future of 2025 to treat the portfolio as a whole. Jeff says, I think it'd be a win-win for Bitcoin in 2025. Absolutely. I'm in agreement with that. I think that you could see a dormant January, February, March. And what I think might happen in January when Trump takes over, I think you're going to see a positive sentiment. That would include the Bitcoin world. But again, Bitcoin is its own entity. There is no predicting it. You either think that it's going to be a place you want to park some money to combat the effects of inflation or not. And yeah, it's a long-term investment in my opinion. So we'll see what happens. I'd be very interested to come back here on this stream in 5 to 10 years. Hopefully I'm still here on this earth, and to talk about how those 5 and 10 years have affected Bitcoin, see what happens. I could be totally wrong about it. We may come back in 5 years and it's 25,000 US dollars a Bitcoin. Who knows? But I like the future. So anyway, we are going to get out of here. Thank you so much for tuning in. My plan for the next month is to be here on Thursdays. Sometimes it doesn't happen because of other things I have going on, but check your email, check the Facebook group. If you haven't joined it, please join. Please leave a comment, subscribe to the channel if you're not subscribed. And thank you so much for joining. That is all I have for you this week. I hope you enjoyed the stream and have a nice weekend. I'll see you next week. All being well. Take care. Bye-bye.